It's called the pulse of the American economy. It represents the 500 largest companies in the US and dictates trillions of dollars in global wealth. If you've ever invested in the stock market, chances are you own a piece of it. But where did the S&P 500 come from? From the Great Depression to the tech revolution, this is the story of how a simple list of companies became the world's most important financial benchmark. It wasn't 500 companies back then, it only tracked 233 companies, and prices were calculated weekly. In 1941, Standard Statistics merged with Porus Publishing to form the name we know today, Standard & Poor. This early index survived the Great Depression, proving that investors needed a diversified way to see if the market was truly healthy or just a bubble. The S&P 500 as we know it today was officially born on March 4, 1957. For the first time, the index expanded to include 500 of the leading U.S. companies. Back then, it was dominated by industrial giants, railroads, and utilities. The calculation was a massive feat of manual math, updated every hour. By the late 1960s, computers took over, allowing the index to be calculated in real time. This changed Wall Street forever, making the S&P 500 the standard for measuring professional fund managers. But history isn't just a straight lineup. In 1987, on a day known as Black Monday, the index lost over 20% of its value in a single session. Panic was everywhere. Yet, the 90s brought the dot-com boom. Technology companies like Microsoft and Cisco skyrocketed, and the S&P 500 grew by over 400% during that decade. But the party ended in 2000, when the tech bubble burst. It took the S&P 500 7 long years to recover its previous highs. And just as it recovered, the 2008 financial crisis hit, cutting the index nearly in half as the global housing market collapsed. The post-2008 recovery was driven by a new force, the tech giants. Companies formerly known as FAANG began to represent a massive percentage of the index. Then, in 2020, the pandemic caused the fastest 30% drop in history. But surprisingly, the S&P 500 also had one of the fastest recoveries ever, fueled by government stimulus and digital transformation. Today, the Magnificent Seven, including companies like Nvidia and Tesla, carry the weight of the entire market, raising questions about whether the index is too top-heavy. Over the last century, despite wars, crashes, and pandemics, the S&P 500 has averaged a return of about 10% per year. As John Bogle, the father of index investing, said, "Don't look for the needle in the haystack. Just buy the haystack." The S&P 500 isn't just a list of companies. It's the story of America's industrial and digital evolution. Where do you think it's headed next? Let us know in the comments. Thanks for watching.